Hi, I'm Nisha Khanna, and I'm here with Tarek Morshed of the Morshed Group at Sotheby's in Austin, Texas. The Morshed Group specializes in representing entrepreneurs, founders, C-suite, and high net worth clients in their residential and commercial real estate needs. Today we'll discuss what happened in Q2 of 2023 in the Austin market, what to expect looking ahead, and what it all means to you, whether you're a buyer or seller. Tarek, welcome. We're looking forward to hearing what your team has to say today.
Thank you, Nisha. As always, we love to share what we're seeing based on the powerful and unique market analytics we advise our clients with at the Morshed Group around the real estate market in ever vibrant Austin, Texas.
So Tarek, what happened in the second quarter of this year in the market?
Nisha, there's three main things that are notable for quarter two of 2023 and for everybody else out there. Number one, the market saw an additional 3% depreciation across Austin, bringing us to about 6 to 7% in price drops across the market by the end of June of this year, which is about what we expected. And there was a lot of fear and noise around that, but we actually felt great about it. The big takeaway is that our market is actually showing a lot of resiliency by dropping a lot less in value than most national experts certainly predicted. Number two, and a big part of why we only lost 3 to 5% in value, is supply of housing here landed at 4 months, which is up from 3 months in Q1. But at 4 month supply, we're in a real estate market environment that's still pretty undersupplied. And for context, a 6 month supply, which is about 18,000 homes that are available, is an equilibrium market between buyer and seller demand. So normally we would actually see 4 to 6% appreciation in prices. So at 4 month supply, there's only about 11,000 homes, and we're well below that 18,000 homes at a 6 month supply. And then number three, the economy and job market in Austin proved it could weather the economic storms of the last 12 months. While buyers still gated buying due to really rising rates, this was a major benchmark. We had forecasted this would happen around July and August of this year, and it's really big that it did, as it's kept our real estate market stable. Job layoffs have been lower than expected. We've remained a top 5% market for job growth nationally in a down year, and unemployment is only at 3.8%. The pain for buyers around interest rates continue to spiral up at 7 to 7.5%, and that just simply shut down activity in Q2, leading to depreciation when normally we'd see appreciation at 4 month supply. So homes on average, they've lasted for about 60 days on the market. Sellers are averaging about 92% of their list price, which is actually a little bit better than Q1. And so, to share a real world example here, this gorgeous and unique downtown adjacent condo, surrounded by nature at the Loren of the world-renowned Loren hospitality brand, is only one of 24 units at this really elevated condo community. We actually kept it off market, but whispered about it in the real estate community, and at 1.975, fully furnished, beautifully, with downtown views and full concierge services, it's priced pretty competitively compared to recent solds. And we're receiving inquiries, yet it's all slow moving. Given the value, we're just being patient and not bringing it to MLS till buyers start pulling the trigger more because, again, they're gating around rates. One final note, this intense heat index simply has made a big impact on buyers looking this summer, and certainly been part of a slower quarter two.
Tarek, what's happened so far in Q3?
In quarter three, 2023, buyer sentiment is some version of let's move forward because the market seems like it's not crashing and we can't wait forever, but let's only do it if it's a great value given these really high interest rates. So really the only places selling are ones priced clearly as a value compared to the competition without having to be a steal necessarily. And we're also seeing creative deals are making a comeback for the first time in a long time. Assumable loans that have lower rates, owner financing, which I haven't really seen in 15 years, all of that given the higher rate environment.
And how do things look for the rest of 2023?
We feel like we've hit bottom and we feel prices may drop maybe another 1 to 3%, but we're pretty much at the soft landing we forecasted. We feel activity will generally pick up moving forward, but buyers will still look for value to be compelled to buy. And so interest rates are kind of like the last domino to fall, and they will. We've been forecasting rates will start moving down somewhere in Q4, and it looks like we're getting a lot of support on that forecast per this chart. As you'll see here, all three major lending institutions are forecasting noticeable drops in interest rates next year, landing between 5 and 6%. So we feel like the market's poised for appreciation heading into 2024, given lower supply, stable job market, as well as steady population growth.
And Tarek, what does this all mean for sellers? What should they be doing or thinking in this current environment?
I think for sellers, they're going to feel the pain of value seekers till rates lower. So pricing and separation from the competition is paramount. Homes that are fully turnkey with pricing that sets it apart from the competition is what it's going to take. Otherwise, price will just have to be aggressive. If you're not willing to do that as a seller right now, you're just better off waiting till next year when rates start banding down.
And what about buyers? Should they be buying now or waiting till later in 2024?
I think for buyers and what we think here at the Morshed Group, and we feel really confident in this is kind of the last window to find value for buyers in the next 4 or 5 years. Between now and December, buyer confidence in our market will slowly increase as they see prices aren't aggressively dropping anymore. And then also once they see rate movement down, things will really start picking up. So as a buyer, or if you're a buyer, just highly recommend you buy now and just refinance late next year. Remember, it's like you marry your home, not the interest rate.
Tarek, this has been wonderful information, and we really appreciate all this education. Thank you so much.
You're welcome. And everybody out there, you're welcome. It's just really a pleasure and fun for us to provide insights with our analytical approach to the market. And, please go to the morshedgroup.com for past market updates and much more information that we post monthly.